The majority of businesses that I'm working with at the moment are making this very costly mistake, and it is literally losing them thousands of pounds a year in lost revenue. And this is a fundamental part of business that you absolutely have to understand. So watch this video and learn about what it is. So my name's Jamie Curiton. I'm the founder of Flow State, and we help plumbing and heating engineers sort their businesses out, in case you don't know. Right, so what's this mistake that I'm talking about? So this is all to do with how people are calculating their profits that they need to make for their business, or it could come down to, where people are trying to add a percentage onto a part that they've bought to make some extra profit, and how they're doing that wrong. So trust me, so many people are making this mistake. So let's have a look at what this mistake is and how we go about fixing it. So the mistake that people are making is they either don't know this exists, or they're just misunderstanding the difference between a markup versus the margin method. So the markup method is what majority of people are working with. And that is basically, some people will just be using a calculator saying, right, the cost of my parts, for example, add a percentage, let's say 20% equals whatever, right? Now, mathematically, what's actually happening there is they're taking the cost of the part, timesing it by 1.2. So the 2 obviously is the 20%. Timesing that by 1.2, which gives a sale price of £120. So there's a profit of that of 20 quid. So in their head, they made 20% profit. However, what's actually happening when we do a profit calculation, so if we take a look at how we do a profit calculation for parts, the calculation is in the opposite way, really. So we're looking at the profit that we made, which was £20, just here, divided by what we charged the customer. So we charged the customer £120, and that then gives us an actual net profit percentage of 16.67%. But hang on a minute, we just wanted to make 20%. So what's happened there, right? So this is the problem, is that when you actually reverse it and do the proper calculation, the profits change. And this is how it's calculated from an end of year business perspective. You look at your turnover, you look at your profit, and you get given a percentage, right? But anyway, right now we're talking about parts. So it comes out lower than what you actually wanted it to. So what do we need to do? So we need to ditch off the markup calculation, and we need to now use the margin calculation instead. So it's similar, just in an opposite way. So we're looking at the cost of parts, but instead of timesing it by a number, we're going to divide it by a number. Now, to get the 20%, we basically looked at the number 1, and then we added point whatever percentage. So the percentage was 20% in our example, which gave us 1.2. With the margin method, what we have to do is look at the number 1, and then we need to take away from that point whatever the percentage is. So in our case, it's 0.2, which equals 0.8. So this calculation is 100 divided by 0.8, which gives us our new sale price of £125 instead. So the profit that we're going to get from this is £25. So when we look at that from the reverse engineered perspective, we've got our £25 profit made. We charge the customer 125, and there we go. Look, we made a net profit percentage of 20%. So this is a much more accurate way of calculating things to make sure that you actually hit that margin that you actually wanted. Okay, so that's based on parts, but let's just consider this from a business perspective, because this is where it can make the biggest difference to you as a as a director or whatever, taking profits. Yeah, we're talking thousands of pounds here of lost revenue. So a way of calculating or making sure you hit your profits is you look at your business costs. Let's say over a year, you've got business costs of 150 grand. Okay, so if you make 150 grand, you basically break even. Now, some people will say, well, I want to make a 20% profit on my business. So they will mark that up by 1.2, 20%, which gives them a target figure of aiming for £180,000 in a year, which will give them 30 grand's worth of profit. But obviously we now know that when we actually reverse engineer that, they end up with 16% profit instead. So if they use the margin method instead, we've got £150,000 business cost to break even. We divide that by our margin of 20%, which then gives us a new figure of 187,500. And now when we hit that figure, we've now made £37,500, which then equates, if we look at it from our reverse engineered calculator here, to our 20% profit. So that there, honestly, if you just switch your calculation, is going to make you, what, £7,500 extra in your pocket every year if your numbers are stacking up against this calculator here, which is a massive difference. It's huge, in fact. So this is where I was going wrong. I was getting to the end of the year. The accountant goes, oh yeah, you're doing all right. Here's your percentage profit that you made. And it's like, what? No, I wanted more than that. And it was because I got this wrong. So if you are using the markup method, ditch it off. Memorize this method and start making use of the margin method instead. And I guarantee you, you are going to make more money. So thanks for watching this video. Hopefully you've learned something. Follow us, subscribe to us, whatever it is, wherever you're watching this video. And I'll see you in the next one. Cheers. Bye-bye.